Good morning, gang. Happy Tuesday morning. Okay, another day. Keep on plodding along here as I was cutting concrete yesterday, putting a channel drain in to get water into the pond and do all that sort of stuff. Typical projects that you do now to get yourself more prepared for the future. And one of them I talk about occasionally is your financial future. uh, what to do with your money, where we're going, et cetera, et cetera, et cetera. And you know me. I'm a firm believer in getting everything paid off: the house, the cars, et cetera. Stop being a slave to debt. You are a peasant when you are a debtor, and you can get into all the biblical commentary that you want, all of which is true. Okay. Even go back to the old saying, neither a lender nor borrower be, good idea. Okay. Everything, if you don't own it, if you don't hold it, you don't own it, right? So over the last, this week, okay, so yesterday, basically, they called the weekend in there for what happened overseas, but domestically, the world went on a massive freak out with gold and silver yesterday. And I mean, when you're seeing 5% down, when you're seeing gold down 10% in a couple of days, everybody's, oh my God, what's going on? Okay. It shouldn't surprise anybody. And I don't want anybody to panic. Oh my God, I made a bad decision. If you bought silver at $30 when it hit 30, FOMO set in, yeah, that was a mistake. Okay. But I'm going to give you this for just a little fact. Over the last 5 years, and almost four of them, I've been talking about it, gold has outperformed the S&P. Just think, all that money that you have in your 401k and your IRA and your investment account or whatever that's taking the risk of being in stocks, yeah. If you're in gold, you'd actually have made more money. Not necessarily made more money, because the value of gold never changes. 1 ounce of gold or 1 ounce of silver is still 1 ounce of gold or 1 ounce of silver. It's just that's how much weaker the dollar's gotten. Okay. Now, a couple of last week, silver hit $30. Right now, silver's slightly under 27. Okay, yeah, there's 10% drop. Gold broke 24. Right now, we're sitting right about 23, and people are going, "Oh my God, losing money." No, let's think about what you made in, what the increase is. Did gold or silver go down yesterday? Yeah, and there were a couple of good reasons why. Okay, first off, you have the miners, the guys who actually take it out of the ground. Okay, dumped a whole bunch of gold and silver on the market. They took advantage of the high prices. More supply means lower prices. Okay, there's the first one. The second one, very common sense. You had some profit taking. People go, hey, I bought my gold a month ago and at $2,100, and it went to $2,400. I'm going to sell it and take my profit minus premiums or whatever it is, but they still made better than 10% in a month on gold. Okay, you're not getting that in CDs. You didn't get that in the S&P. In the last month, you haven't got that in crypto. Okay, so you have people, I don't want to say day trading, but swing trading gold and silver right now. Took some profits. I don't blame them. It's not why I'm in the market for gold or silver. Okay, I'm using it as wealth protection, as a hedge for later. And then, of course, you had the whole media outlay of, well, gee, looks like Iran and Israel aren't going to have a big war. And so people thought, no, okay, you know what, don't need to protect my money. I can go back and take some more risk. But that leads me back to the original comment of performance. Why would I want to take money out of my best performing asset and put it into something that has more risk and less return? I don't know. Maybe I'm just smarter than the average bear. So what do? Okay. You look at the price of gold and silver right now. And a couple of weeks ago, I told you, no, I would not be buying gold at these prices. And silver, I'd be watching. Okay. Well, that's now changed with the dip. I'd watch silver. We'll start with silver real quick. I'd watch silver real quick right now as I'm watching silver, like I said, just under 27. If silver gets down to 26.50, I'm backing the truck up. Okay, that is long-term support on the silver price. I wouldn't be going, oh my God, if it hits 26.50, I'm there. If it's 26.51, I'm waiting. Okay, penny wise, pound foolish. Watch to see what it does here. You'll probably have a little bit more drop today. There's still, at least early, there's still some pressure on it. But if you're looking to get into the silver market, you're probably going to have a good pop to go in there this morning. Gold is about the same thing. Gold is pretty much near its support level. It's pretty much at it. If you've got about another $20 drop from here, $25 drop from here, it's time to back the truck up on gold. And I know there's probably plenty of people who go, oh, gold's going back to 2100, gold's, fine. There's always people that go, gold's going back to $35 an ounce. It never did. Okay. All those people that were insistent in the 70s when gold went from 35 to 400 and then to 800 in the 80s, they were waiting for it to go back to $35 an ounce. They're still waiting. Okay. They'll probably be waiting forever. But now you look at the other side, and this is where it gets important. And if you stuck around this long, you can get the benefit of what the problem is. The dollar is getting weaker. This is the cause for gold and silver to go up. The funny money that is in the stock market, okay, is not a true representation of how the economy is doing. The value of gold and silver is much more an indicator of our economic strength or weakness. Gold accelerating at the rate it has lately shows you how weak fiat currency has gotten around the world. And it's like a snowball rolling downhill. It goes, it starts, and then it's just going to accelerate like crazy. It wouldn't surprise me one bit this year to see gold break 3,000. It wouldn't surprise me one bit to see silver break 40. Okay? Not that, oh my God, gold and silver are worth that much more. It's that the dollar is getting weaker and weaker and weaker. Let a little bit more of this chaos go on in the Middle East. You honestly think this is over? Oh, Israel and Iran said, gee, we're not going to do anything. They'll regroup. And within 2 weeks, you're going to have something else crazy go on between the two of them. And whether it's directly from Iran or whether it's shot out of Iraq or whether it comes from Syria or wherever, that the Hezbollah or Hamas or ISIS or Al-Qaeda or any of these terrorist groups being funded by Iran go, something's going to happen. Wait till one of these episodes in New York with all the protests or whatever. Wait till that turns into another Boston Marathon incident. Wait till somebody decides to do an Oklahoma City deal. Okay. Yeah. Then you're going to see the dollar fall apart. And this is what we're at right now. Different people have different thoughts of assets to protect their money. Okay. whether it's, and depending, and again, that's totally correct, don't get me wrong, because it depends on where you are. If you're still in the part of the journey on your prepping journey where you're still getting the basics of your food put away, yeah, that's more important. You can't eat gold and silver. Okay, if you've got a couple of years worth of food already in storage, and all of your systems, contacts, whatever, have made to continue to get your meat products, you know how to grow your vegetables, you've got your gardens going, everything's kind of on autopilot there, you're done there. Okay. If you've already got the weapon systems that you want to have, whether it's your rifles, your pistols, whatever else, okay, and you've got a boatload of ammo, as I've said before, what my thoughts are for your main platform, whether you're an AR guy or an AK guy or whatever, 10,000 rounds per rifle. If you've already got that, okay, you're good. Maybe you've got to replace what you go to the range with. Sure. Some of us have got, into our power. Okay. That's been something I've been working on for a few years. Okay. Just about done. Well, once I've got that all done, okay, what's next? You're working on your water storage, done that. There's always something, your security. But the other side that you have to remember is this. All the stuff that we prep for, whether it's an EMP, whether it's nuclear Armageddon, whether it's a complete financial collapse or whatever it is not a guarantee. Some of you guys have been around long enough that you were prepping for Y2K, right? What happened? Nothing. So you got to prep also for good times and bad times, which would be called normal times. I mean, we've all gone through recessions in 1980 and 1987, in the early 2000s, in the late 2000s now, okay. We've dealt with all of those, and we went on and lived our lives. You need to prepare for that scenario too. And this is where the debt idea comes in. Getting out of debt, paying off the house, paying off the car. Yeah, I get it. It's, oh my God, I still owe $200,000 on my house. It's not like I can write a check. No kidding, okay? But what you can do is pay an extra $100 or an extra $200 or whatever toward it a month, and you'd be amazed when you start doing the numbers how many years that starts taking off the back end of your mortgage. Okay, just putting it there. A lot of people have recently got tax refunds, and I always love the stories on what people do with the tax refunds. Oh, they went on vacation. Oh, they went to Walmart and bought themselves a brand new big screen TV, whatever it is. And I'm going, how much do they owe on their house? Oh, they still owe $160,000 in their house. And they spent their tax return on a vacation. Got it. Okay. And people wonder why they're broke. Money management, personal money management, is not an overly difficult concept. The goal is to have more money at the end of the month than month at the end of the money. We've all heard that line. Okay. How people put it into practice is completely different. I understand enjoying living life. I want to enjoy living my life too. But when you come to a point of going, what's more enjoyable? Sitting down at the end of the day and going, I don't owe anybody any money. Or sitting down at the end of the day and going, well, that vacation was great. Now I just got to pay for it over the course of 10 years that I put it on my credit card, and you stress out for the next God knows how many months trying to pay off the vacation. Who's really enjoying life? Stop worrying so much about the instant gratification and focus more on the long term of real life. Gold, okay, maybe out of people's budgets. Dropping $2,000 on an ounce of gold plus is not convenient. Dropping $30 on an ounce of silver here and there, picking one up, going on eBay or whatever, finding some junk silver. Gee, spent $100 on a whole bunch of old dimes or something. Good idea, okay? Because it's protecting what you have. And you all know the story about buying a men's suit in 1920, buying a men's suit now, ounce of gold, or buying a house or buying a car. You can look at those, and the parallels are crazy. Gold stays the same. What you can trade it for in regards to tangible goods. Dollars, not so much. Just don't freak out by what's going on in the commodities market right now with gold and silver. It's actually a good time to buy. Very close to. Not a good time to panic. And that's something that we all need to think about. We need to have our heads screwed on straight. And when everybody else is freaking out, this is all what prepping is, guys. When everybody else is freaking out, that's when we're sitting back and going, got it under control. Pinball out.